Welcome back to the Precision Trader. In this video, I'm going to go over some of the craziness that was in the stock market today. Everybody that was playing around the market knows that Bed Bath & Beyond went pretty parabolic today. With that said, just want to show you how you could have traded it and taken advantage of it. We personally in the server, we took advantage. We played Bed Bath & Beyond. But with that said, these stocks right here, you can really get hurt. So in my opinion, if you're going to play stocks like this, you got to be using an order book, because if not, you're really trying to trade these stocks blind. And again, we know with Bookmap, the number one order book in the market, it allows us to see on these orange and red levels where the vast majority of people are looking to buy and sell, the major liquidity levels. So again, understanding how the market reacts to liquidity will help us to be able to trade these stocks much safer. So with that said, I'll cover a couple of our Bookmap strategies here, one being the short scalping strategy at major liquidity, and then also to the momentum Bookmap strategy. So anyway, with that said, let's jump in here. Usually I do the candlesticks, but I'm going to do the line, the bid-ask line today, just to help you to be able to see the price action a little bit more detailed. With that said, we start the day on Bed Bath & Beyond. Big liquidity up here at 17. So understand this. Whenever you see major liquidity in the order book, okay, understand that exerts a gravitational pull. Okay, the market is going to want to be gravitated towards that huge level of liquidity. So once we started paying attention to this stock, this morning, I made sure and pointed out in live voice chat trading, hey, they're going to get it to 17. That's undeniable. And then once they get it there, more likely they're going to dump, because again, what happens? You have major liquidity come in the book. And what do we qualify as major liquidity? Major liquidity is something that we can see on a stock like this size, usually on that $1 increments, $1 to $5. Okay, if we can see it on the $1 to $5, then we know this is major liquidity, especially on a $17 stock. So with that said, 17 was major liquidity. So what proceeds to happen? Pushes up to 17, and this is a good lesson. If you're holding profit on this stock, okay, this is a smart place to take it. Okay, why is it a smart place to take it? Because 99% of the time, when you get to this major liquidity, you are going to dump back off of it some degree. All right. So with that said, in this case, dumped all the way back to 16 or below 16, back into the 15s. Now, it's very simple. If you're playing to the upside, take your profit. Or the other one that we love to take advantage of is shorting at these areas. So when other people are taking profit, we're looking to short to take advantage of that. So we see that pushes right up to 17, proceeds to dump all the way back into the 15s. All right, now at this point, we see buyers starting to come back in the order book. Okay, so at this point, we're just waiting, we're in a wait and see situation. Because again, we've already taken advantage of 17, seen a little bit of liquidity come to the upside here. They knock it down again. But ultimately, we're waiting for it to absorb. We're waiting for it to absorb 17. That's when you get the green light to play continuation to the upside. All right, so, and that's exactly what happens here. All right, so once you see this orange and red line disappear, that means all the orders at that level have been filled. Now it has the green light to be able to push through. But what's going to happen 9 out of 10 times, you're going to have to push through, get that initial push through. You're going to come back, you're going to retest that level. And then from there, if you show that you can hold support, wick off of it, head to then that's confirmation that you're going to head to the next major level of liquidity. All right, so that's what you're looking for. So you're looking for taking profit, shorting out the major liquidity, and then once it proves that it can absorb that major liquidity, then that's your green light to re-enter the position safely. All right, because just holding blindly is not smart. It just really is not. Not whenever you have the insight that an order book can give you. So with that said, we absorb 17 finally, and what happens? We push through, come back, support. You see this? Push through, come back, support, bam, confirmation. Now, from there, where is it heading? Well, 18 was our next major level. Okay, we could see that pretty good there on the 50-cent increments. So With that said, pushes to 18. Well, what happens when it gets to 18, the major liquidity to 18? People are loaded to sell there. They end up knocking it back all the way into the 16s. Okay, so there's no reason to be holding all this profit here at 18. Let it off. Take it. Let it pull back to around 17. You want to re-enter around 17, that's fine. Or whenever you see major liquidity starting to come back into the book around here, 17, hey, knock yourself out. But there's no need to needlessly give back a bunch of profit. So with that said, all the major liquidity is still to the upside. So when it comes back here to 16, 17, our bias is still to the upside. So with that said, finally pushes up to 7, or the 18 liquidity again, pulls back off of again, and then finally we get the absorption. All right, we get the absorption here. It absorbs 18, pulls back below it, finally has to come back up, and then there's our key right there. Push through, pull back to the level, because again, if you get a stock that just blasts through a major liquidity and doesn't come back and retest on it, then you have a guarantee that's going to for sure come back there. It ain't a matter of if it's going to come back, it's when it's going to come back. So with that said, once you get this, the push through, come back, support, there you go. That's your confirmation. Now you know that this level is very solid to hold and push to the next major level. So in this case, where was the next major level? 19. So gets up to 19. Okay, absorbs that. Now again, this was a medium level. Wasn't near as big as some of the, when we initially had 17 and 18, but it was still solid. But with that said, pushes up to 19. We get some little pullbacks in this area, right up underneath it. But what happens here? It pushes through, it absorbs 19. All right, this right here. So it absorbs 19, comes back, support on it. There you go. And even you had more buyers coming in right here, so that's extra confirmation. So again, what is this telling me? This telling me this wants to head to the next major level of liquidity. And where was that at? 20. So like I said, I've seen this right here. We're talking about it in voice chat. Said, hey, there's the support. They're going to get it to 20. And then when it gets to 20, it's going to be some pretty easy money on the pullback. 75 cents to $1. So gets to 20, bam, dumps off of that liquidity there. They dump it back really quickly into the 1940s on that one. And then from there, what do? They push it right back up. Like I said, all these buyers just coming in. They were just ready to juice this thing. But anyway, with that said, they come back. They finally absorb the 20 liquidity, support on it, and then they push up. So where they push to, the next major level in this case was 21. Now they came up 20, 30 cents short there in this case. And then from there, sellers started coming in really hard. They end up dumping it all the way back to 19, 20, somewhere right in that area. So, but again, you got to realize at this point, 20 was the major liquidity for the day. Okay, so this was like the huge, the monster level at this point. So, here for it to only pull back 50 cents on this initial, right here on this initial, or 50, 60 cents, that's kind of surprising considering that. I mean, in this situation, more times than not, you're expecting it, a good $1 at a minimum. So for it to just push right back up, it was no surprise whatsoever to see it dump right back and get closer to the 19 liquidity. Because again, it didn't spend a lot of time at 19. It was a pretty quick run. So with that said, eventually dumps all the way back to 19. Nice buyers come in here at 19. But again, all the major liquidity still to the upside. So again, that's our bias. Our bias is that it still wants to continue to push, especially this early in the day. So pushes back up to around 20. They dump it right back to 19 again. Choppy. At this point, it's, anything can happen. So eventually they push it back to 20 again. They dump it off of it again. And then finally you get the absorption. You get the absorption of 20 here, and then they finally can hold it. So once they start getting up in here, now they're starting to hold 20. They're starting to get support on top of 20, and this is a good sign that, hey, they're gonna get it higher. So with that said, they eventually do. They end up getting it all the way up to 20, 21, pull it back to closer to 20, back to and then ultimately their goal is to get it to 22 at this point. This is where your major liquidity started coming in. Now, one thing to keep in mind if you're trading a stock like this is to constantly be looking for monster liquidity to come in above. And with that said, 30 was the big target. So once this started coming in, it was very clear that, hey, this is where they want to get it to. And where did they actually start bringing it in the book? I apologize for not mentioning it earlier. They started bringing this 30 liquidity in. Where did it get very big and visible? What time of the day? All right. Okay. So once it started getting to around $22 is when you started getting a lot of good visible liquidity up around $30. So with that said, once we got up here and we got the $22 liquidity absorbed, yeah, I mean, that was it. I mean, that was showing that, hey, for sure they want to get it to the monster 25 liquidity and ideally the 30 liquidity. So anyway, they push through, they get support, they absorb 22, get support on it, all the support in the 22 area, very, very clearly showing that where they want to get it to 25. And then once they get it to 25, they give it a nice, I think 70 cent or so dump off of 25. So we took advantage of initial dumps in this area as well. And then where was the big, again, 30. Now, again, what kept it from getting to 30? A big part of what kept it from getting to 30 was they halted it. As soon as they halted it, you brought a lot of fear into it. So once that happened, that kind of really shot the stock in the foot, so to say, as far as getting to the 30. Because now there's there's going to be a lot of fear into the stock. Because again, if you once they halt you, that means, okay, things are getting pretty insane. So with that said, it got to 28. We did short in the 27, 28 area. In voice chat, we took advantage of that multiple times, a short on 28. We didn't hit it a third time because, like I said, we were still holding hope for it to get to the $30 liquidity. But after that halt, which was this was all the halt area, yeah, they couldn't, and then they halted again to the downside. So again, made some nice profit off of the 28 entry, and then we took that off around 25. We didn't want to risk holding it at 25 for them to pop it right back up. So anyway, with that said, they get it to 23, they halt it again, and then they eventually get it back up, end up pushing it all the way back up to 28. But you see here, they get it to 27, dump it off this major liquidity, come back up, they absorb it, push to the next, which is a clear sign they're pushing to the next major level, which was 28. But with that said, 28 just kept loading up all day long. They started bringing in a bunch of bear flag liquidity to push it even lower off of that 28 spot. So with that said, I think I've beat this horse enough. Just keep this in mind whenever if you're trading a stock like BBBY, because I can tell you right now, if I would have known personally anybody that would have been holding the stock, I would have been telling them 1,000%, hey, that's awesome that you held, you got in, but you have to be taking this. You got to be taking it in that 28 to 30 range, or even 25, because like I said in voice chat, this is going back to $19 to $21. It ain't a matter of if it's going, it's when it goes. And, sure enough, we made it there at the towards the end of the day. I think it ended up dumping back to $17, $18. So it's one of those that, there's no need to give back a ton of profit when you know that there is monster liquidity sitting up here in this $28 to $30 range. I mean, look at that. I mean, and then there's no major liquidity above 30. So why in the world would I want to be holding on to something when I can't see any major liquidity past that? So like I said, congratulations for anybody that took it in the 25 to 30 range. Again, you were spot on. Now, even more so would have been the 28 to 30. But like I said, the halt at 28 really messed up the momentum. Like I said, if it wouldn't have been halted, I mean, I was extremely confident they were going to get it to 30, right to this 30 liquidity. But with that said, once they halted it, man, they just started just loading the liquidity at 28 for people just, trying to get out of there. So yeah, like I said, take advantage of Bookmap. Like I said, only cover two of our three key Bookmap strategies here. Like I said, shorting at the major liquidity above, and then also looking for the momentum, which again is absorption. The orange and red line disappears. You need to see it push through, come back, support on it, and then that's your confirmation for the push to the next major level of liquidity. So like I said, hope this helps you out in your trading. And like I said, do not trade a meme stock without Bookmap. So with that said, appreciate you watching the video.